Good day, everyone. Today we're going back to our feedback videos in the final accounts preparation unit of our advanced bookkeeping, advanced diploma in accounting qualification, AQ 2016 from AAT. So in this video, we're going to be looking into, as I've mentioned before, the second practice assessment of our mock assessment series. So here, if you look at it, like the previous exam's got 2 hours, and then you have 6 tasks. You should attempt to complete all this examination. So let's have a quick look at this. Let's start with our first question now. So here they have given you a question with reconstructing general ledger account. So this is like missing records straight away. So if you look at it, this is pertaining to missing records. Let me put my phone in silent so I don't get disturbed straight away. Yeah, now if you look at that now, they have given you certain information about receipts and payments recorded in the bank account includes, and then they also given you opening and closing entries into your these general ledger accounts like trade receivables, trade payables, closing inventory, and bank. So if you notice something here also, if this is a closing inventory for that particular month or the period, this will become the opening entry for the current financial year. So this one, it's going to be giving us some information about how to calculate some missing information. So here we also going to look at it. All sales are happen on a credit terms, and then you have a contra entry of £318 made between sales and purchase ledgers. A proprietor draws 1,650 per month from the business bank account for personal use. Remember, this is per month, so per year that is going to be multiplied by 12. The proprietor transferred her own office equipment valued at 1,400 to the business during the year. The non-current assets sold in the year was a motor vehicle. So these are the information you may require to fill this particular book. So now let's start with this. Now, if you look at that here, the trade receivable had an opening balance of 8,924. So let's see this as balance brought down 8,924. Okay, and then also if you look at it, the amount from credit customers. So if you look at that here, this is the money coming into our bank account. So debit side of the bank account and credit side of my SLCA. So it is going to be £79,805 there. And then also if you notice that here, if we have anything else, to suggest the information we require to fill in here. Also remember, this is already recorded. We recorded this side. This side also has to be recorded because this is the balance carried down. The balance carried down must go on the credit side. Why? Because this will become opening balance of the next period. And then what else we need? Do we have anything to do with this information here? No, but there is one. This contra entry of 318, which used to clear balance from your sales ledger control account, offsetting a balance from your purchase ledger control account. So if you want to reduce this balance, you have to do here the control account as this. So we're going to say this is going to be purchase ledger control account and £318. Okay. Bear for a second, please. Regardless what we try, people try to find you. Okay, so here we've done them all. Now we have to find out how much was transferred from the sales daybook. So the figures from the sales. Okay, so here we have to have the sales. The difference between those two information will be the yearly sales there. Okay, there is no returns or anything like it's been shown here. So sales ledger control account, it's not going to be affected by those figures. They want you to find out what is the total sales figure. So what we're going to do now, we're going to find out the credit side 89,150 minus 8924. That's going to give me 80,226 pounds will be the sales value. So if you see anything else missing from there, that should give you some sort of an indication what is the sales figures going to be. All right, now then let's move on to the find the cash purchases by preparing the bank statement from the year ended. So what we need to know now, we need to fill this information in from the beginning, yeah, and then this one is going to be eventually changed into another incomplete record, but we're going to have that information all put in there. So let's start with the credit balance, because it is starting with the credit balance means the opening balance of this is going to be a balance board down figure. So let's go back in there and check that figure. Balance board down on the bank is 3,283 pounds. And then also let's scroll back up and check the other entries we need to go into there. So the amount from the credit customers, 79,000. So we're going to say sales ledger control account, 79,805. We have done that here. And then we also have to look at it. There is a capital injection of 4,000 pounds, the money coming in. So we're going to say capital account, 4,000 pounds. And then also, if you notice that here, the disposal of the non-current assets. So from the proceeds of that one, we have 2,950 pounds. So we're going to say that here, motor vehicle account, we go look for the motor vehicle at cost, 2,950. So we call that the disposal account. We normally have to do the disposal account there, isn't it? Because when we're going to disposal of our non-current asset, we'll say this is a disposal account there, because this is where when we you done your advanced bookkeeping module, so you have noticed when you're going to get rid of your non-current asset, we use the disposal account, so we can dispose all the proceedings in and out of those related accounts, like the motor vehicle accounts, accumulated depreciation account, and the final money coming in account, which is the bank account. Okay, so here we have done all of that. Now let's look at the credit side. The credit side, we have the payment to your suppliers is 3,900, so 39,990, 39,090. That is going to be purchase ledger control account. Do we have anything else? Yes, we have payment for the office expenses. That's 22076. So we're going to say office expenses. And then also the owner withdraws money from the bank account. So it's credit to your bank account. So 1,650 multiplied by 12 is 19,800. That amount is also going out from there. And then also remember there was a bank charge for the value of 178 pounds. So we have got all of those information here. Yeah, and then obviously we have done the withdrawal. This one, on the other hand, because there's no cash involved there, because the owner, herself has, she transferred an asset into the business instead of cash. Therefore, there's no need to update the bank account with this information. But then also we have to remember there's one more. This closing balance, it's a debit balance. So this is going to be coming down on the credit side. Because this is the bank balance, isn't it? If the money is on the bank balance is 1,568, if that was the balance, so the closing balance has to be on the credit side. Okay, so we have all those information now. So what we got left now is the difference between those two accounts. So because that has to be the cash purchases, because purchases account is going to be a debit entry and your bank account is going to be a credit entry. So let's see, 755 minus 85995, that is going to give me amount of 760 pounds. So this is the missing amount we have to find within this cash book. So altogether you have 15 marks for this question. But what you have done so far, these information are irrelevant because they're given to you just to, to give you some extra information, but these ones are useful in making your final calculations. Okay, let's move to question number 2. Now, question number 2 is also is more of a ethics side of it as well, plus some accounting. What do you call? What they call it. The theoretical side of it, to be honest. So this is, asking you about, a particular statement here. Show whether the following statement is true or false. Incomplete records is a term that may be used when part of the accounting system of the organization is absent. Yeah, of course, isn't it? Because sometimes if it's a small business, they may not have everything in the record, but they have some there, but which may lead you to find all the missing information. So it is fine because may be used. The word they use may means it gives you more options there. So the statement is becoming true. You are a trainee accounting technician working on a final accounts of a sole trader client. The client is registered for VAT. So the total cost of goods sold for the year ended on 31st of March is 2017 was 120,960. The inventory decreased by 550 during the year. So this word itself can be something you have to be, like you will be normally concerned about because they haven't told you your opening or closing inventory. They simply stated the inventory decreased by 550. How I'm going to, translate this into two different figures? You really don't have to, because you have to hypothetically think it doesn't matter what amount you're going to be on your opening inventory and closing inventory, the difference between them is 550 less. So that means if your opening inventory is 1,000 pounds, your closing inventory is going to be 450. If your opening inventory is 550, your closing inventory is 0. So that's all you have to think about it. So imagine your opening inventory is 550. Think about that hypothesis. Yeah. So if you know your opening inventory is 550, your closing inventory going to be 0. It cannot go any lower than that, to be honest, because you cannot have negative inventory. So you have to keep the biggest one, the smallest one to 0. The biggest one is going to be the difference. So here, if I say that way, they're asking you to find out, calculate the total value of purchase net of VAT for the year ended on whatever it is there. So here, the cost of goods sold, because this one, it is also net of VAT because VAT is not playing a part of your cost of sales calculations because VAT is something value added. So how I'm going to find that out? So here they have given you the cost of goods sold is 120690. Yeah. So what does the equation looks like? So let me share a different video for you quickly. Let me just bring the spreadsheet up quickly. So you will now, okay, so this is the spreadsheet. So we're going to talk about opening inventory, purchases, closing inventory equal to cost of sales. So I'm going to do rejig all of it. Yeah, so all of them are resized. So if I know my closing inventory is 120960, check the question again. Yeah, 120960, and you don't know the purchase, make that as an X. Yeah, this is going to be a plus, and this is a minus, isn't it? So now if I put 550 here, this is an X and this is a 0. Why? Because the inventory decreased by 550. It is a hypothetical figure. If I put 1000 here, it doesn't matter. Your figure, it's going to be still, pointing you to the same amount. So I'm just making it 550 to the sake of simplifying it. So what it is, X plus 550 is 12,000, so 120,960. So what is the X? X is equal to this. This is going to be equal to this minus that. The answer is going to be 120,410. So this is how I come to that question. Whenever you get a part saying your inventory decreased, what if they say the inventory increased? So therefore, what do? You just change this format. Yeah, this to 0 and this is 550. So from 0, it is increased to 550. That makes more sense to you now, isn't it? If in case that was the scenario, then this negative figure will be going the opposite side, and then this will be a positive amount, because this negative will become a positive on the opposite side. It's just a hypothetical way of conquering that particular question, because sometimes this is where the difference is going to be for you when it comes to a wordy question like that way. If they say the inventory is decreased by 550, what is the meaning of it? That means from that amount, it has gone down to this amount, but the difference between them is going to be 550 less. Okay, next one. The trader has limited storage space, so aims to keep inventory equivalent to approximately 1 month of average trading. Okay, so complete the sentence by picking the most appropriate option from the drop-down list. I would make an estimation of what of the closing inventory. If it's going to be 1 month of average trading, yeah. So this is your. Oh, here you go. They also given you sales for his markup is 35%. So if I know this is my sales, what do you call for the year, this is the total purchases, and what do you think is going to be per month I'm going to be selling out of this? So it is going to be divide by 12, isn't it? Normally, if you divide by 12, you'll find 1 month worth of purchases. So the inventory value is going to be closer to 10,000 pounds, because if you notice that here, this is the per year sales, so it means the purchases. So your inventory will be valued from whatever you're purchasing from. So if you're going to have, that is for 12 months worth of purchase, 1 month worth of purchase is going to be just divide by 12. That's going to be just somewhere of an estimate of 10,000 pounds. It can't be any lower than that. The business sells its goods at the markup on cost of 35%. Okay, calculate the sales figure to go on the trial balance. So what is the formula again? Cost of sales is going to be 100% when it comes to markup. So therefore, if you know that is your cost of sales, markup by 35%, you're going to multiply by 1.35. So 120,960 multiply by 1.35. And the sales figure, I'm going to put it down here as 163,296. Okay. And the next one is standard rate of VAT applies to all the sales. The trader sells an item to a customer for £305, including VAT. There are no discounts. Calculate the original cost of the item to the traders, excluding VAT. Okay, so here, now what we're going to do, we're going to find out a reverse calculation with the given information we have now. Okay, so for that one, I need to bring you up the spreadsheet again. So what I'm going to do, I'm just going to share the desktop, is easier. Share the desktop. Excel. Okay, so let's bring the spreadsheet back up again. So we have the question close to us. All right, let me move this to a side here so we can calculate this. So the first one they have said now, the trader sells an item to a customer for £405 inclusive VAT. So what is the net cost? So net cost is going to be 405, yeah, divide by 6, multiply by 5. So £337.50. This is the net sales value. Okay, so you already know this net sales value, yeah, is the 35% markup inclusive. Yeah, so if you know that is the 35% markup inclusive, to find what was the original price of the goods excluding VAT, the cost, original cost of item. So the cost of goods sold, what we need to do, we need to divide this figure by 135 or 1.35. Then it should give you amount of £250. So you may ask me how I got to that one. So if you know this, this is 135% of the original price. This is the 100% of the original price. So if you want to find how much is the profit involved in that £250, you can do a reverse calculation to just prove it. How much is 35% of 250? So this is going to be equal to this, multiply by 0.35, and then you're going to add these two together. 335 there. Okay, so if you notice that now, that is how I got to that answer. But again, you shouldn't take that long for this. It's fairly a straightforward calculation. The next one we have, at another sole trader client, you are asked to find some missing figures for their final accounts. So here, at another sole trader client, you're asked to find some missing figures, excuse me, for their accounting final accounts. So situation involving completing records always suggests that the client does not act with integrity, because you know what, the word they use always, that is going to be something, all it's going to be give you an absolute reason to reject this answer, because these words means the statement has to be absolutely perfect. It is not perfect, so therefore we can ignore this one. Next one, any association with missing figures means that you will not maintain your integrity. Because any association, that means that's also not right, because for me, as far as I know, that doesn't seem right at all. Because if you have any association with missing figures, that means you will not maintain your integrity. Now, I don't think so. If you become connected with the misleading information, you must dissociate yourself from it. That, on the other hand, it is true. Why? Because if you become connected with the misleading information, you must dissociate yourself from it. Yes, that makes sense, because you know what, you just don't want to incriminate yourself any information which is not pertaining to correct. Okay, so here this is a misleading information. You should not be connected to that one. So that is the answer for that. The next one, while reconstructing the bank account, a total of £2,000 was identified, which you believe to be cash sales. The proprietor tells you by email that is an injection of capital. Okay. How do you treat this explanation? Choose one from the following option. Accept it. Reasonable evidence has been produced. Are you sure there's any reasonable evidence? Just by an email, somebody claiming that is a capital? Ignore it. £2,000 cannot lead to material misstatement in the account. You can't just ignore it, even though that is, £2,000. This is something you have to be very careful about. The next one, reject it. You need to contact HMRC immediately, because we still don't know 100%, isn't it? So we can't just call HMRC and compromise your customer and possibly lose him forever. But you have to look at it here. The last one, remember it, examine the bank records again with this new information. So we need to make sure we have to investigate it a little bit further to ascertain whether this information is correct or it is not. Okay, so in this scenario, the possible right answer is going to be answer D. Now let's move on to question number 3. So now we are looking into the sole trader final accounts there. So if you look at that here, the trial balance for the sole trader for known as Onyx Trading is below. All the necessary year-end adjustments have been made. The following are accounting policies used by Onyx. Sales revenue should include sales return, if any. Purchase should include purchase returns and carriage inwards, if any. So what we need means include means they're net of those two. They don't add those, they will take them away. Okay, purchases returns get taken off and carriage inwards get added on. So I have to rephrase that clearly. Sales returns, purchase return gets taken off. The inward carriage, it's going to be added onto your purchase. So they ask you calculate the sales revenue figure to be included on the statement of profit and loss. So what we're going to do here, we look for the sales and then you have the sales return. So if you're going to look at it, both of them, if you use the calculator now, the amount is going to be 158,589 minus 2602. That should give you 155,987. So let's go back here, type that information, 155,987. Next one, purchase side of it. Now purchase, we have 105,457 minus the purchase return of 845 plus any carriage inwards, isn't it? So if you see any carriage inwards, let's see if there are any there. I don't see anything of carriage inwards there. So that's fine. So after we've done both of those calculations, 104,612 will be the answer there. If there's any carriage inwards, we need to make sure we add them on. I don't see anything here, so that should be fine. I'm re-checking again if there's anything we missed. No, it's not there. So now they ask you to prepare the profit and loss statement for the Onyx Trading. If necessary, use minus signs only to indicate the deduction of account balance used to make up the cost of goods sold. Which one it is your purchase, isn't it? Purchase, and you have to take away the closing inventory. Bear for a second, please. Please accept my apologies. It's another call I had to attend suddenly. Okay, so here sales revenue 155,987, and then we also already know the opening balance of inventory. So we're just going to put it that down here. Opening balance of inventory. So the amount we're going to do. First, we choose what are the things it needs to go into my profit and loss statement. Okay, so here. Closing inventory goes there, depreciation charge, expense, interest paid, opening inventory, payroll cost, prepaid, no, it's not prepaid expenses, liabilities, purchases, purchase returns, recycling rebates, sales returned, and any other things there. No, I don't think there's anything else there, but we just check it. These are accrued expense, accrued income. These are both goes in your profit statement of financial position. So here, the opening inventory now is going to be 13,313. And then the purchases, we have found out how much it's going to be. Purchase is going to be net of the purchase returns. So that's going to be 104,612. And then we also have the closing inventory. entry, it's going to be a negative figure of 12608. Okay, so this is going to be recorded on this side. Once you've done them all, you have the cost of goods sales. If you add these two and take that away, it's going to be 105,317. So we have that, and your gross profit is going to be 50,670 pounds. And then we're going to add anything else needs to go here. Remember, there is one income we can't ignore. This is going to be your recycling rebates. This is some sort of a money coming into the business, and therefore this is going to be going as an income. All right, so this one, so recycling rebates for the value of 598. So we've done that now. And then the expense side of it, we have depreciation charges we already looked into. So here, depreciation charges for the value of 3,603 pounds. So let's tick it. We have done it. General expenses. General expenses. General expenses 29,970. And then we have third one is going to be payroll costs. That is going to be how much? 21,483 there. And then next one is going to be and did we miss anything else? Oh yeah, interest paid. Interest paid here is going to be 575. So after you've done all of that, these 5 expenses will be total to 55,631 pounds. But now you notice if you add these two and take that away, your profit is going to be a negative figure. That means it's a loss. So according to this, you need to show a negative amount, means a loss, by using a minus sign. So the difference between those two is going to be minus 4,363 pounds. All right. So this is how the answer should reflect. Now, if you go further down, you have another marks question for 3 marks. You have the following information about a different sole trader. A profit of 6,409 pounds was recorded. The proprietor did not take any drawings. A permanent capital injection of 5,000 pounds had been was made to clear the business overdraft. So also, this one helps increasing the capital account. Complete the capital account for this one. Clearly show clearly the balance carried on for the new financial year. So this is the opening balance here. Yeah. And the profit was recorded. This profit will go into the capital account, as this is coming from the profit and loss account, because this will increase the owner's capital. So 6,409 pounds there. That is the first one. It did not take any drawing, so there's nothing goes on the debit side. A permanent capital injection of 5,000 pounds was made to clear the business overdraft. So it is basically he paid money into the bank account for 5,000 pounds. So it doesn't matter it clear the overdraft or not clear the overdraft. He had made they made a capital injection of 5,000 pounds, so which increases all the balances. So the new balance carried down going to be whatever is there, 29,009 pounds, 909 pounds. That should be the answer for this one. Now let's move on to question number 1.4. Question number 1.4, it's showing you, let's have a look. Yeah, this is the task. This task is about the knowledge and understanding underpinning final accounts preparation. Answer the question below regarding different types of organizations. So what you need to do, you have to have some sort of a theoretical understanding of these questions. So first one they're talking about here, with reference to companies, Which one of the following best described limited liability? So if a company goes into liquidation, each shareholder loses more than the amount of the original investment. Makes no sense at all, because the point of going into the company is it's not liability. They will have no liability there. Returns the individual shareholder may receive on their investment in a company are limited. No, it doesn't make any sense as well, because what is the meaning of limited liability is what they're asking. It's not about how much they're going to return for their investment. Salaries payable for shareholder are subject to cap set by management. Yeah, it's all right, but it doesn't describe the limited liability, isn't it? But the last one, the amount each shareholders can work in company is restricted. That also doesn't look like. So we have to look at what can be. What is that again? Can be the real understanding behind this question. So what they're asking here, this is not to do with the company as a whole. This one they're talking about as what best describe the limited liability. For me, out of all these answers, this one, if a company goes into liquidation, each shareholder loses no more than the amount their original investment. That means if the company has some sort of a other liabilities, like they owe another all their what do you call creditors, like in 10 million pounds or whatever is there, the shareholders are not liable for those extra liabilities. What they're doing now, they only lose what they invested on the business. Okay, they're not liable for any other things apart from what they have originally invested in the business. If he's a sole trader, on the other hand, if he has taken a loan, even though it's different to the business, he is obliged to pay that loan, even though the business is going under, because he must have put some sort of a collateral for that particular loan. So therefore, he will be liable for that loan, even though that's the business he took it from. So what probably limited liability means is whatever they invested in, that is all they're going to lose. They will not be liable for anything above that one. So that will be the answer for that. Next one. Maybe I didn't read the question carefully first time. When I read through that one, I just didn't make any sense to me. But then I realized what they actually mean by this. Which one of the following is a benefit of running a business as an ordinary partnership rather than a sole trader? So what is the benefit? So they will sometimes give you a benefit of different businesses, or they will give you the disadvantages. So you have to, eliminate them before you get to the right answer. So if you're looking at ordinary partnership, limited liability is incorrect, because unless you are in a limited liability partnership, your partnership is not have limited liability. You will have unlimited liability for all your debts. Partnership legislation generates less administrative work than a sole trader legislation. That is not also true, because if you look at that sole trader, legislation is the easiest. You don't have to, go through like a partnership agreement. You don't have to do goodwill. You don't have to do what is that again? Appropriation of what is that again? Your profit and loss. So those things you don't have to do if you're a sole trader. So this is also wrong. There is a chance the greater funding from the ownership of the business. Of course it is, isn't it? Because if you look at it, more people are going to be in the partnership. There's chance of more funding coming into the business so that it can develop the business. So that is potentially a right answer. Each partner has responsibilities for the business decisions of others as well as their own. It makes no sense that way, because I have me and a person X there. They're responsible for their own business decision, but that decision has to be made in conjunction with my decision as well. They're not responsible for mine and their individual decision, because it has to be a combined decision. So the answer is going to be the third one. And then look at the part 3. Show whether the following statements are true or false. The accounting equation for limited company may be presented as asset is equal to equities plus liabilities. Yes, equity is the amount the business is worth, which is more of what do you call again, the share of the profit holders, they have put it in there. So this is going to be equivalent to the capital. Equity and capital are both identical, but in different sense. Okay, so assets equal to equity plus liability, that is true. Next one, a sole trader's investment in their business is known as share capital. That is not true. A sole trader's A share capital is somebody buying into a business. They call it a share capital. It is for companies, not for individual sole traders, because we just call them as just capital, not a share capital. Equity interest in a limited company is split between owner's investment and amount arising from profits or the other events. Yeah, it makes sense. Yeah, if you look at that here, the equity interest in a limited company is split between the owner's investment and the amount arising from profit and events, because it makes more sense. But the equities interest in a limited company is split between the owner's investment, because the owner putting the money in there, and then obviously amount rising from profit and other events. Yeah, that makes sense. Answer the following regarding the need for and preparation of final accounts. The framework within which business work identified two underlying assumptions governing the financial statements. Drag and drop. So the underlying assumptions are the, what is we call again? The accrual basis. We're looking at it accrual basis. So whenever a transaction occurs, we need to be recording on that time, not when actually the money is getting paid. Accrual basis accounting means we need to record the transaction as they happen straight away. And the second one is going concern basis. Going concern basis means we assume the business is going to be operating for a foreseeable future. So that means if it's a going concern, that means it is okay. The business is not winding down or in immediate threat of going into liquidation. So that is what we have to assume when we're going to do our final account preparation. The next one we have here. Complete the sentence below. A sole trader may require information from a set of limited companies to do what? So if you look at those answers here, access the ability of the organization to settle a short-term debt, extract financial information for tax return, obtain a list of company customers. What you need their account to. So if you want to look at somebody's account, you can only do for the purpose of it's going to be something to do with the dealings with that company, not their private matters. So if I am dealing with company X, I may request their documents to see whether they will be able to settle my debts to them or their debt to me. So if they owe me like £50,000, will they be able to settle it? That's what we will need to know by looking at their accounts. We don't need to have financial information for tax returns. Why you need to look at somebody else's for tax return and obtain a list of companies' customers? That is even worse because that is confidentiality. You can't just breach, customers' information to find, what their customers are. So which is not right. The answer is going to be the first one. And the next one is why is it important to for you to keep up to date with technical accounting knowledge? Choose the most important reason. So if you look at that here, this is involved, how you, looking at as professional competence, and the professional competence and due care. To improve your promotion prospects within the organization, is that the main reason for that? It can be, but it's not the main reason, because all the interest parties assume the accounts being prepared according to the current regulations. That is true, because if they don't assume that way, the account's going to be wrong, means everyone will be liable for some sort of a sanctions or fines or even, a criminal proceedings, to be honest. So it has to be very careful. We choose the most important answer. But let's see the other two. In order that accurate confidential information may be submitted to the authorities, nothing to do with keeping up to date with the accounting, technical accounting knowledge. So that the user's final account can check your continuing professional record. They don't need to know about that, but it is important to keep up to the latest technical accounting knowledge is important, because all the interest parties assume the accounting records are prepared according to the current regulations. Question number 1.5 now. We got only two more to go. we're almost 45 minutes down. We still got a lot more time left, but what I always ask the students, if you stuck somewhere, flag and move on. Flag the question like this and move on. Yeah, but here we're doing it so far so good. So let's have a look at this one here now. This is a task about partnerships. You have the following information about partnership. Riva, Sam, and Terry have been owners of a partnership business for many years. At the end of the financial year, 31st of March 2007, Sam retired from the partnership. The goodwill valued at £48,000 on this date. So these are the three information you need to go about: the profit share before and the profit share after, and the annual salary effective until 31st of March 2017. So this is also need to be taken into account for. So now let's have a look at this. There will be no salaries for either partner after Sam's retirement. So here, after Sam retired, these two partners will not longer have any salaries. That's okay. Goodwill to be introduced into the accounting record on 31st of March with the partnership change and immediately eliminated. Now they want you to do, using this information, complete the task below. Update the Terry's capital account, showing clearly the individual entries for introduction and elimination of goodwill and the balance carried down. So now what we need to do, we need to find out what will be his new balance carried down. For that one, I'm going to bring the spreadsheet up on the screen now to show you how it looked before and how it looked after. And then also we're going to do the goodwill account first. Okay, so let's delete all of this. So now, oh, it's not letting me for some reason. Here you go. So this is the goodwill account. So the goodwill now we're going to be creating for 3 people now. So here, this is going to be Riva, Sam, and Terry. And then Riva, Sam, and Terry will get their goodwills written off. So similarly, we will have capital accounts for each one of those partners as well. So let's do this only for Terry now. This one is the capital account. So just to give you a gist of it, how it looks like. The Terry started with how much are there? It's £20,000. So now what we're going to do, we're going to look into how the goodwill getting introduced. So initially the partnership figures 50, 35, and 15. So we debit the goodwill account when we creating the goodwill, and then credit the goodwill account when we clearing the goodwill. That is the important part you have to look at. Okay, so if you look at that now, when we create the goodwill, Riva of that £48,000 goodwill, she'll get half of it, 24,000 there. Okay, so 48,000 multiplied by 35% is going to be 168000 for Sam, and Terry will have whatever left over. You'll have the scraps of £7,200. Okay, so 7,200. Once the goodwill is created, this is the entry created on the goodwill account. So the Terry's account will have £7,200 credit side, stating this is the goodwill account. So here, let's say 7,200, and we'll say this is going to be coming from the goodwill account. Okay. The next one, when the goodwill is written off, Sam will not get a new rate. Why? Because Sam is retiring, isn't it? If Sam's retiring, there's no part of goodwill impairment from his side, but Riva and Terry will take the whole of the goodwill on their account. So here, if I'm going to multiply by 0.7, this is going to be 33600. And Terry will have, divide by 7, multiply by 3, 14400. Now, if you look at that now, these means the difference of this Sam's goodwill absorbed by these two different partners now, because Sam will take this as an additional capital, or means his share when he moves out of the business when he's retiring. So here the next part is going to be here for the amount of 144,000. So this one, it is the impairment or the writing off your the goodwill. So here then go back again. You're going to say goodwill 144,000. Remember, guys, they're talking about capital account. So the salary or no profit, it's going to be recorded here. All right. Only we're going to be recording any goodwill side of it. So once we've done that, the new balance carried down for Terry's account is going to be for 128,000. Just to make both of those information correct. Okay, so what you can see in this question, it's not much information you need. I only bought the spreadsheet to show you how it looks like on the goodwill account first, and then how this is going to be impacting individual capital accounts, because they didn't give me a capital account for any of the other two partners, but it will eventually go there. So if I'm looking at it, here the Terry have 168,000. Riva 24,000, and similarly Riva will have 33600. In case Riva had amount there, like say, 40,000 pounds, basically she will pay 9,600 pounds from her capital to buy Terry's whatever amount is owed to. Okay, so this is what, not Terry, the Sam's. The goodwill share. So Terry has paid some towards it. I'm pretty sure that is going to be the difference between them. Yes, 7,200 pounds. Yeah, Terry has, because he acquired almost double the old share, he has to give, half of the goodwill he has impaired with earlier. Okay. Now, next part. Following the complete the following by selecting one option in both cases. Goodwill, the value will increase the value of Sam's capital account upon retirement. So if you look at that now, if he has some sort of a value here, this is certainly going to be increasing his capital accounts value, isn't it? Because he doesn't have anything writing off when he's leaving the business. Therefore, this will definitely going to be increasing Sam's capital account on retirement. This is because he need to be charged for the goodwill established by Riva and Terry. No, that's wrong. He's entitled to the share of capital's future profits. No, he doesn't get no future profits. But the third answer, his effort building the business while he was a partner must be recognized, because when he was there as a partner, the business grew. Therefore, when the goodwill was created, that goodwill rewards him for the work he has done. So it recognizes his effort building the business. So that is the right answer. The share of his business profit already has been received. It's nothing to do with the goodwill. Now, next look at this one. Another partnership account has partners Asma and Ben. Annual salaries, drawings for the year, interest on drawings for the year, and then profit share. They're all given you the information. Now, after all the appropriation, there is a residual profit for distribution for £72,000 for the year end, or 31st of March 2017. So they have told you these things. Okay, after all the other appropriation, there is a residual profit for distribution for £72,000. So what now we need to do? We need to find out what is the share of residual profit. What is the residual profit? It's after everything's been taken out. Okay, everything's gone out of the way, and this is what got left. So whatever we got left now, or £72,000, Asma takes 60% of the profit. So it is going to be 60% multiplied by 72,000. It's going to be 43200. And Ben will have whatever left over there. It's going to be 28800. Now we're going to go into the partnership appropriation account. It's all done now. What we need to do, we need to prepare the current account. So how I'm going to do the current account? This is going to be importing information from these boxes there. Okay, so here, how I'm going to do it. First one, you already know there is a salary for the value. So let's see, salaries. So Asma takes a salary of £12,000. Okay. Uh, they also said you must enter zeros where appropriate in order to obtain full marks. Does Ben obtain any salaries? Nil there. So we need to put a zero there. So then whenever they say that way, please ensure do not leave those boxes blank. Next one, they're saying, what do you call drawings for the year. So the drawings goes out from this side. So here, debit drawings account. This is the current account. Credit the bank or whichever it is there. It's fine. 46,400. And then here is going to be 30,000. Okay, so this is on the current account we're going to show. This is what the drawings were. And then next one. Interest on drawings. What is that going to do? It's going to increase the amount they owe us, isn't it? So therefore, interest on drawings is going to go on the same side for £288, and this is going to be £190. Yeah, that's £190. Anything else, I need to put it down there. Then also remember there is a share of profit. So what we're going to do, we're going to say share of profit and loss. The share and profit and loss, they have 43,200 here, and then this one is going to be 28,800. So what do you now notice in this one? This will go against whatever is here. Okay, so this amount will definitely increase the current account, and this one will reduce their current account. So if you notice that now, there can be one side is higher than this side. Therefore, the balance carried on is going to be on this side for one account. For the other account, the balance carried on is going to be on the opposite side, because it is simply how it was initially. Because if you look at that here, Asma was on debit and Ben was on credit. Now it will be switching places. So Ben now will have a new balance carried on of 10,000, sorry, £1,060, and Asma will have a new balance of £3,712. If you add all of that together, yeah, that comes to the same amount there. All right, now let's move on to the last question. This task is about final accounts for partnerships on introduction to operating regulations for a limited company. Okay, so let's look at that. Okay. You're preparing statements for Onyx partnership. Again, it's, Onyx names come up now. Partners are John and Pat. You have final trial balance below. All the necessary year-end adjustments has been made except for the transfer of 33,140 profit to the current account of partners. Partners' share of profit and loss ratio is 3:1, John taking a larger share. Using this information, complete the following task. Calculate the balances of each partner's current account after sharing profits. Indicate whether these balances are debits or credit. Okay, so let's have a quick look at that now. So if you notice that now, the share of profit is 33,140. So John will take £24,855, and Pat will take 8,200. 85, because you just have to multiply by that certain amounts there. You should get, hold on. Did they say something else here? 140. Did I have the right amount? Oh, yes. I have forgot there is information here about the current accounts. Okay, so initially, John has 1,774 on the credit, and Pat has 708 pounds on debit. So what we need to do, let's bring our spreadsheet up. So we'll be able to do this account. So here, let's delete this all. Current account. Okay, so here, John, and the other one is Pat. So here, John and Pat. So let's put that figures in perspective quickly. Okay, so let's do that now. So the John has a credit balance on the current account of 1774, and Pat has a debit balance of 708. Okay, so once you've done that, what do you need to do? We need to appropriate this share of profit into those two accounts. So here, John will have 24,855 and Pat has 8,285. So this is the new reality of the accounts. So after we reconcile those two balance, they're asking you what will be the new balance. Both of them will have a credit balance now. Credit and credit. All right, some sort of connection issues. It showed to me earlier, but it seems to be fine now. So let's have a look. So what is the new balance for this account is equal to that plus going to be 26,029 pounds. And this balance is going to be this minus that amount is going to be 7,577. Okay, so please, when you get this question, just have a quick look at it, whether there will be another balance there, which you may have to reconcile, because the one I put it down earlier is just their share of profit. So now the current accounts are updated with new amount. Then they're asking you where appropriate of Onyx as a policy to combine bank and cash account balances for the purpose of final accounts. Calculate the bank and the cash figure that will appear on the statement of financial position. So if you look at that here now, the bank account is 5544, cash is 406. Add them both together, 5544 plus 406, which will be equal to 5950. So let's put that down here, 5950. Now let's go back in there and start filling the missing information which we need to update our data with now. So let's see what are the things you need to go in the statement of financial position. All your assets and your liabilities and capital will go there. So like accruals, bank, capital accounts, cash account, which you already found a combined answer for. Closing inventory goes there. Both current accounts goes there. Irrecoverable debt is an expense. Yeah, machinery at cost. Machinery accumulated depreciation. Then we have prepayments go there. Payroll liabilities go there. And then purchase ledger control account, sales ledger control account, and the VAT control account. These are all information we need to put it down in this. Okay, so what assets we have here? So we look for machinery. Machinery's cost is how much? 44,540 there. Accumulated depreciation votes 17,724. So this is the next one, 26,724 there. And the current assets now, what are the current assets we have? So look for anything with the debit balance. So for example, cash and bank, we already decided is 5950 there. We have done that now. And then we have closing inventory. So it is going to be somewhere here. Inventory for the value of 20,040. We have that one. Then we have sales ledger control account balance there. So that's going to be your trade receivables, not payables. They're next to each other. So be careful what you choose. Trade receivables. The amount we're going to be looking for is 32,806 there. And do we have anything else? How about prepayments of 1,300 pounds? They're also going to be your asset there. 1,300 pounds. And yeah, it looks like that's all we have now for the value of 60,096. And what are the liabilities we have? We have purchase ledger control account there. So let's go trade payables. Trade payables is under 19,098 pounds. Is that 19,000? 98, yeah, 19,098. You have VAT for the amount of 3421. And then we have payroll liabilities there. So let's find the payroll liabilities. Payroll liabilities for the amount of 835 pounds. And then you also have accruals for the value of 1,260. I'm not sure there is anything else you can add to those liabilities there. They are the liabilities. So I'm looking at on the current liability side. So what will be your net current asset? It's going to be this minus that is going to be 35,482 pounds. And your net current asset, if you add both of those boxes together, 62206. Yeah, 62206. But now let's finance them by the capital accounts and then the current accounts. Capital accounts will have balance of 21,000 for John, and Pat has a capital accounts value of 7,000 pounds, altogether 28,000 pounds. Current account now is the value we calculated earlier, 26629. And this one is going to be 7,577. So altogether, the total for your current account balance is 34,206 pounds. So if you add both of those together, 62206 will be the answer. So if you notice that here, your net assets and your finance by section matches, so your balance sheet balances. It's nothing else. You need to look forward to it, because just to be careful, guys, this is where you have to make sure you use these buttons to your advantage. So you can just click on it, whatever you've done. Once you finish it, you can just click on there to say you have completed that entry. So that means you're checking and double checking missing entries, whatever you need to fill up there. Okay. Now look at the last part. Consider the following in relation to a limited company that has been trading for a number of years. It has always had a financial year end of December 31st. Okay, so now they are asking you, show whether the following statements regarding its financial reporting are true or false. The general public may view updated income and expenditure total for the company at least once a year. Of course, because they have to file the report at least once a year. Therefore, the general public may be able to view that one. Okay, so that is true. There are no restriction regarding to the selection of reported headings for the cost of sales and other expenses. That is not true. When they say there is no restriction, because it's a limited company, they need to make sure you categorize all of those according to an accepted headings. Okay, they can't just simply put everything there, no restriction. No, if they say no restriction, that is not true, because there are certain restrictions. Okay, so the answer is going to be false for that one. Next one, notes to the financial statements of company may be provided to the relevant authorities separately from the statements themselves, because on the statements, they don't have to itemize everything individually. What they can do, they can put them into certain categories and leave those information redacted, whatever's in there. But for the authorities, they can submit like an itemized billing, okay, which makes sense for them. But is it true or false? That's what they're saying. Notes to the financial statement to the company may be provided to the relevant entries separately from the statements themselves. No, it can not be provided separately, because the notes to the financial statement must be with the statements themselves. Okay, it's not like when you need it, when you don't need it, it has to be there, because you cannot say, oh, I'll give you some of it here and some of them on a different documentation, which is not right, because this is going to be creating some sort of a diversion, or put it that way, because people will not see all the relevant information when it's required, because that's the point of filing your accounts there. So the answer is going to be false for this. Okay, the word according to this, they're using the may word. Okay, so the may word gives you some sort of like a free what do you call the freedom to think, oh, this is all right, because they say it's may. It's not, because this is something you can't have no what is that again, exception to it. So you must provide the notes when you're submitting your statements themselves. Okay, so yeah, guys, that should be the end of the practice assessment. Let me click on it, press submit. Yep, it says there you have assessed as competent. So let's get out of here. Let's go back to our screen now. So here, what we need to do on this final account preparation, again, we have to look into as um, this exam compared to the, what is that again, the advanced bookkeeping module. Um, Certainly not the same categories you're going to be facing like in advanced bookkeeping, where you had depreciation, non-current asset register, accruals and prepayments, control accounts, so many things you're looking at there. But when it comes to final accounts preparation, it is the crux of everything. You put them all together, finally you know what it looks like on your statement of accounts. And then obviously this is going to be a stepping stone moving into level 4 when you're going to do the financial statement of limited companies, because what you've done now is going to be for your sole traders and your partnership accounts, because you haven't done anything a bit more advanced in nature. So hopefully this is going to be spur you on to do better on your future modules. And of course the next module is going to be, depending on what is your curriculum, is going to be the management accounting side. So you're going from financial accounting to a completely different management accounting for your next module if you're sitting for the exam after that. So I wish you guys all the best. The video is only about 1 hour 40 minutes long by the look of it. Fingers crossed. Hopefully we get everything done out on time, and I wish you guys all the best. Take care. Bye bye.